All right, so just want to introduce myself. I'm Jason Sleet. I'm the communications director here at Department of Revenue. I'm the one who set up all these Zoom calls. So you probably got an email from me, or maybe you got some kind of an invite to have my name on it. I don't actually deliver the material. I just make sure that everybody's signed in and everybody gets to where they need to go. Make sure that the recording gets done. And later on, my shop is the one that actually puts it on the website. So if you have any questions there, as we said, this will be recorded for future watching. We have a lot of people who may not be able to be here for the live event, and we understand that, and we want everybody to have this information, so we do put it on our website, so that way people can watch it later. That way we can be as accommodating as possible to everybody's schedules, because we understand. So, but I would like to introduce the people that we have today helping us out. So first, Rachel Milne is going to be in the background. She is one of our panelists who's in charge of all the question and answers. And she's our income tax specialist, and she knows just a little bit about everything that has to do with taxes. She's pretty much a wizard. And so she's the one that's going to be actually answering questions. As you have questions and put them in the question and answer section, she'll be fielding those. But our presentation today is going to be given by Shay Daigle, and she is our taxpayer accounting unit manager, and she is the subject matter expert, and she's the one who built the presentation, and she will be the one that's actually presenting today. So without further ado, thank you so much for being here. We really appreciate you coming out and doing these webinars. We really appreciate being able to get out and talking just straight to the people that we need to on the subject matter at hand. Shay, how's everything going?
It's going well. Thank you. Thank you, Jason, for helping us with this. And of course, thank you, Rachel, for helping out with the chat and the questions. I really appreciate it. All right, let's go ahead and get going. We have a lot to cover here. All right. So good morning, and thank you for joining us today on this webinar where we're going to be providing information about the Montana Elderly Homeowner Renter Credit. Again, my name is Shaylin Daigle, and I am the Individual Income Tax Unit Manager within the Department of Revenue. We anticipate this webinar will last approximately 45 minutes, and that's including time for any questions that you may have. We're going to be doing our best to answer all questions during or at the conclusion of the presentation, but if we are unable to answer any of your questions during the duration, we will be getting back to you with a detailed answer. So if you have any questions, a reminder to go ahead and type them out within the chat box, and we'll have them in the queue when the time comes. We will be pausing briefly throughout this webinar to answer any questions revolving around the current segments. All right, so here's what you're going to expect from today's webinar. We're going to briefly review the essential aspects of the Elderly Homeowner Renter Credit, which we also refer to as the 2EC, as well as the EHRC. And the 2EC is the scheduled name for this claim for this credit. So we're going to be going through how to file the EHRC when you or your client does and does not have a filing requirement within the state of Montana, and also how to navigate our transaction portal site that we also know as TAP. And then towards the end, we're going to cover how to handle information requests based on the claim credit we receive, and how to tell if a facility property is tax exempt. And also please keep in mind that if a facility or a property is not subject to property taxes, the rent paid cannot be used towards this credit. All right, so what is the Elderly Homeowner Renter Credit? So let's go ahead and start with the basics. The EHRC is a fully refundable tax credit. So this is as opposed to some of our other tax credits called non-refundable credits, which can potentially reduce your tax liability to zero, but cannot be directly refunded outright. So the EHRC has the capability to put cash back in your pocket if your total of the amount of credit exceeds your tax liability. So let's say you don't have a tax liability, or the tax liability is less than the total amount of your credit, the remainder will be refunded to you. Additionally, renters and property taxpayers that don't have an income tax filing requirement may also claim this credit. So we're going to be going through the requirements here in the next slide, but I wanted to touch on the calculations of property tax and rent paid for the purposes of the credit. The property tax to be reported will be the total amount billed for the qualifying tax year, not the amount that has been paid. So for 2023, this will be the property tax bill that most Montanans just received from their counties. The rent to be reported will be the amount that was paid during the year, minus any amenities such as housekeeping, meals, or any other potential additions outside the scope of just traditional room and board. Again, if the facility or housing authority is not subject to property tax, the amount of rent paid cannot be claimed for this credit. Generally, most facilities will give you a breakout of costs when requested in order to figure in the correct amount of reportable rent. If the facility is unable to break out these costs, we do have a general breakdown for these situations when needed, and we'll touch on that a little bit later. All right, so a little overview for the credit. To qualify for the credit, taxpayers must meet the attestation requirements. These are items that taxpayers must meet in order to claim the credit. Taxpayers must meet an age requirement, must have been a resident and occupied a Montana home for a certain time period. And then finally, they must meet the income threshold. And we'll go over each of these a little more in depth. The calculation is a formula based on the taxpayer property tax paid or rent paid. The credit is equal to the lesser of $1150, the net household income, the amount money deemed available to pay for the tax or rent equivalent, property tax or rent equivalent, or the phase out limitation. I will go through a couple examples so you guys can see how it works. Okay, so first up, the attestation requirements. So Montana residents who are at least 62 years of age by the credits year may qualify for the credit. If a married couple is filing jointly, only one spouse needs to meet the age requirement. So for 2023, a claimant must have been 62 years of age or older on December 31st, 2023. To qualify for this credit, taxpayers must live for at least 9 months of the year, and for at least 6 months, they must own, rent, or lease a Montana residence. If the taxpayer dies before October 1st, they won't qualify because they won't meet the occupancy requirement of having lived in a Montana resident for more than 9 months. Then the taxpayer's gross household income must be $45,000 or less. Gross household income is a little tricky, so we're going to go over that a little more. It's important to understand what this term gross household income means, so let's break it down, starting with household, which according to the state of Montana is a group of individuals who not only share the facility, but also the accommodations, furnishings, etc., and as well as expenses. This credit is not an individual credit, meaning each person, roommate, or partner cannot file their own claim separately. Only one claim per household can be filed, with the total amount of rent, property tax, and income all reported together. As for income, this definition starts with federal adjusted gross income, then adjusts further with several add-backs. So federal adjusted gross income is your taxable income minus any adjustments to income. Gross income includes your wages, dividends, capital gain, business income, retirement distributions, as well as any other type of other income. Adjustments to income include such items as educator expenses, student loan interest, alimony payments, or contributions to a retirement account. These include any losses from federal schedules C, D, E, and F, as well as all non-taxable sources of income, which we will also cover. We have noticed some confusion in the past regarding the gross household income as well as the non-taxable portions that must be claimed. The claimant is not being taxed on the non-taxable portion of the income, but the gross amount must be reported in full on this credit. So we'll go ahead and take a brief pause. Is there any questions before we talk about the non-taxable income and add-backs?
We're not showing any questions in the Q&A section, but just a reminder, folks, you can definitely type those in and we will get to those throughout the webinar.
Thank you, Rachel. Okay. So let's discuss the add backs, and in addition, any losses claimed on those federal schedules we discussed on our previous slide. Taxpayers claiming the elderly homeowner renter credit need to add back the non-taxable income to calculate the amount of credit. Again, this income is not being taxed if it is not taxable, but needs to be included to properly figure the correct amount of credit the individual may receive. In addition to any losses claimed on those federal schedules, taxpayers claiming the EHRC or the 2EC also need to add their adjusted gross income, these items of the non-taxable income. So these are going to be any losses claimed in the federal AGI, such as passive losses, capital losses, or net operating losses, exempt interest, such as interest on federal, state, county, and municipal bonds. This also includes any interest that a filer may exempt as part of the partial interest deduction. Any form of pension, IRA, or annuity income, except for non-taxable account rollovers. Railroad retirement benefits, all Social Security benefits, except for those directly paid to a nursing home. Refundable tax credits, this includes the elderly homeowner renter credit received during the credit year, the Montana and federal earned income tax credits, federal child tax credit, the Montana unlocking public lands credit, the new Montana adoption credit, property tax rebate, and the individual income tax rebate. Any capital gains not included in the adjusted gross income or AGI. This would be an exclusion a taxpayer takes. This is most commonly the exclusion for the sale of a main home. And we have disability benefits, including veterans disability, Social Security disability payments, and workers' compensation, alimony or support money, strike benefits, cash public assistance, and long-term care insurance. So any amount being received throughout the year that is income, both taxable and non-taxable, just needs to be included on this credit. Okay, so property tax billed or rent equivalent paid. So the credit is the lesser of $1150, property tax paid, rent equivalent, or the phase-out limitation. It's important to understand what these items are. Again, property tax include the taxes, special assessments, and fees billed on the property tax statement. It's the amount billed on the house and up to 1 acre of land. Know that this is the amount the taxpayer was billed and not the amount which has been paid. The rent equivalent is 15% of the amount the taxpayer paid to occupy the home. When filing the claim, you'll report the entire amount of rent paid for the year. Taxpayers that live in long-term care facilities usually pay more than just rent. However, they are only allowed the amount that is paid for that room and board, for that actual rent. They must exclude the additional services that are included in the cost of their stay at the facility. They can do that either by using a breakdown that the facility provides to them or using the long-term care facility calculation worksheet, which is found at the bottom of the credit form. Okay, do we have any questions coming in before we go over how to file a claim?
We had a couple coming in. The first one, which I answered, was on the IRA pension annuity is the return of non-taxable contributions, such as traditional IRA basis, don't excluded. And I said, sorry, I read that wrong. But so disregard the yes, but all the retirement benefits are included for purposes of calculating gross household income. And then clarification, did you say the gross income includes IRAs rolled over? And Shay, do you have a clarification on that?
So if there is not, or if there is or is not a filing requirement, and you get that rollover, and generally it has a certain code on that 1099-R, you would not add anything that was rolled over to the credit since that money wasn't technically received. So that is one of the exceptions to the rule. And then it's one other question, even though it is not available to them. I'm assuming that is in regards to the retirement basis. So, and maybe
to clarify that a little further, so this is just the gross distribution that you receive each year. So I believe that's on, what's reported to you on your 1099-R as the gross distribution. Hopefully that makes a little more sense. Not the taxable distribution, but the gross distribution. And then we have, since the counties lost the lawsuit regarding the 95 mills, we don't have the correct tax at this moment. What will we do? That is a great question. I'm hoping that, some counties, I believe some counties did send out bills for the correct amount, barring that the 95 mil lawsuit would not go in the county's favors, and some counties did send their bills out without the 95 mils calculated. So hopefully those counties, I believe Lewis and Clark County did not calculate the 95 mils. So I'm hoping that they send a corrected bill out before tax season, so you guys will have the correct amount. Of course, that just depends on the county you live in, right? So we don't have any control over that since we don't send the actual property tax bills out. Wade had a question here. What do you include in income for a Roth distribution, the full amount or the earning portion? And Shay, do you want to answer that one, or?
Will you go ahead and answer that one for me, Rachel?
Yeah, of course. So then, again, when you receive your Roth distribution, what's going to be reported to you as the gross distribution for the tax year? That's what will get reported on, just for the calculation of household incomes. For the calculation of household income, again, they're not being taxed on this amount. It's just to calculate basically what's coming into the household in order to pay either your property tax or your rent. Sheila asks, if someone pays a tax but they are not the owner, do they get the rent equivalent or the tax amount that they paid? We've got some special rules surrounding that. Shay, I believe, and maybe you can help me here. So if someone pays a tax but they're not the owner, I believe we count that as rent. Is that right?
Correct. Yep. So you can't claim it as property tax, but you can claim it as rent for the where you're residing.
Okay. About 50 counties sent out incorrect tax invoices. Thanks for the information. That is not going to be, that's going to be kind of a disaster this coming up. And then Billy Joe asks on Wade's question, what of the basis amount? And Billy Joe, I'm not quite understanding what you're asking there. I believe, just what the gross distribution was for the year. So what the gross distribution is reported to the taxpayer as having received for the tax year. Are both rent and property taxes are paid qualified for the credit in the case of situations where the taxpayer lives in a trailer home and owns the land but rents the trailer, or vice versa? Can you answer that one, Shay?
Yeah, absolutely. So that is one of the situations where you can be claiming both. Of course, you're paying the property taxes on the trailer home or the land or however it's playing out, and then you would still report the rent paid for the lot rent or anything like that. That is quite common nowadays. We do see a lot of that. So yes, that is generally allowed.
All right, great. Those were all great questions. Shay, I'll hand it back to you to continue with our presentation.
Awesome. Thank you. Okay. All right. So let's go ahead and go on how to claim the EHRC. So we do offer several ways for taxpayers to claim the credit, especially since some individuals will not meet the minimum filing requirements. You can find more information regarding these thresholds with the requirements to file within the Form 2 instructions. If using the Form 2 itself, so our actual tax return packet, you can complete pages 1, 2, and 10. So this is going to be the main page of the return that contains your personal information, such as your name, address, social security number, And then on page 2, you're going to have the signature paid, the direct deposit information, and then the 2EC schedule. So the elderly homeowner renter credit schedule is located on page 10. And of course, keep in mind, if you do have a filing requirement, you may need to complete additional schedules of the return packet depending on your new unique tax situation. Another quick and easy way to file for your credit when you do not have a filing requirement is on our transaction portal site, which is most commonly known as TAP. And we're going to be going through that process here in a moment, but for now we're going to look over the 2023 Form 2 and how to file when you do and do not have a filing requirement on the form itself.
Hey Shay, before you get started with that example, we did have a question about proof of house acceptable to show that expenses are not shared when there are 2 families in one household. This person has a client that lives with parents but has their own apartment space. They have a separate kitchen, bathroom, etc. And the client's gross income is more than $50,000 and the parent's gross income is less than $45,000. So I believe that of course the parents would qualify because they have less than $45,000, but it sounds like the preparer just wants to know, what should I send in to justify that, to show that those expenses are completely separate.
So what I would suggest doing in that kind of situation, and I feel like more and more of these situations are starting to crop up. So what we would have you do is send in a statement from the individual's filing, and then of course the other individual sharing that specific dwelling. Just saying, hey, everything is separate. These are 2 separate locations. A lot of the times the mailing service will have, let's say the address is 100 North Street, and then you would have 100 and a half. Generally, it's kind of separated out. Pretty much any information that you can provide to us would be ideal. I would prefer getting additional information compared to not enough, then we'd have to send another request. But anything regarding that, any lease agreement information, any information regarding how the address is split with a half, just go ahead and send us whatever you can, and then we'll look at those cases when they do arise.
Sorry, Shay, we got a couple, we've got lots of other questions coming in here. So Susan asks, if someone rents an apartment above a commercial building, will that rent qualify? And I believe so, just so long as they're paying rent and the landlord is able to provide them with a receipt that they've paid rent.
Correct. And so as long as that property is, of course, subject to property tax.
Okay. And then in that case, wouldn't you need to apportion the amount of property tax deductible by the parent in relation, I believe, to the previous question that asked about how to separate the parents and the parents and the daughter or son's house. And then based on the area of the home used as a parent home. So I think it would depend on whether or not who was paying the property tax bill, right? So if the kid is paying the property tax, if the child or the parent's child's paying the property tax, then it would be considered rent, right? Okay. And then we would base that off the area of the home used as a parent area and the renter area. Is that what you guys would use? Okay. Is the proof of rent and the tax bill required with the filing?
So with that situation, we do advise sending in supporting documentations, and later on in our webinar, we'll kind of go through those options. Generally speaking, we would like that information so it doesn't hold up the credit, because if we're reviewing a particular credit and we don't have access to that information, let's say we couldn't find the owner's name for the property tax bill. And of course, we don't have any verification of the rent actually paid or the facility name or any of that information. We would send a request letter asking for that information so that we have it on file to validate the claim that's being filed.
Okay. And then Sheila's got a couple questions here really quick. When the situation where the parents and child or other person are at the same address, do you need something to confirm that the owner is not collecting rent? Or if they are, they add that to their gross income? So I think in that situation, it would be like making sure that the landlord is filing their Schedule E to report their rent. Yes. Of course, there's disclosure issues there. However, I think that in that situation, you know, we would make sure there is a rental in place. And then the rental above the commercial business, does that need to be classified as a residential unit with the Department of Revenue? I don't think so, just so long as there's some sort of rent receipt, right?
Right. That's the way I would handle it, at least in this kind of situation. But Sheila, I can do a little more digging and find out for 100% certain for you.
And then finally, one last question.
Yeah.
When we receive documents through e-file or e-pass, I believe that's when those documents are provided via an e-file attachment. So I believe that's with the tax return. And she's still gotten she's gotten letters in the past still requesting that information. Perhaps that's a training issue with that particular auditor, would you say?
So with that kind of so correct me if I'm wrong, please, but what I'm understanding that e-file, so that you're using an online software, tax software, right through the state of Montana. Now, a lot of times, yes, you are able to add attachments, binary attachments, supplemental information to those, but it's not guaranteed that that information's actually going to reach us, that we might actually have that information when it comes through MEF, so the vendor software. Sometimes the vendor supports it, sometimes they do not. Sometimes we can find it in the attachments, and for whatever reason, sometimes that information drops off the system completely, and we have no indication that it was there or that it should be there. So generally, if you are seeing that, I would love for you to reach out to me and let me know kind of what kind of software you're using, and we can do a little bit of digging and see if that is actually something that's supported, or if maybe something's not working right on the vendor side of things, and we can go ahead and contact the vendor and see if we can go ahead and make a solution. But if you are receiving that request letter, 9 times out of 10, of course, certainly some things are gonna be out there, and maybe we've missed it, or you know, there's a timing issue with the received information and then when the letter was sent out. But generally, if you do receive a letter, we were unable to locate it, or we don't have it with any of those attachments, or even with the return image. So we're asking for a copy of it again, just so we have it attached to the actual individual account.
All right, that's what we got right now. So I'll hand it back over to you to go through that example or those examples, Shay.
Awesome. All right. Okay. So here you see a snippet of page 1 of the 2023 Montana Form 2, so the tax return itself. So we're going to be going through an example with the individual that has a filing requirement with the state of Montana. And I really wanted to show you guys kind of various aspects and areas of the return itself to kind of see how things communicate to one another and where we're actually getting those calculations. Okay, so for our example, we have Alan Bitterroot. He is a 64-year-old gentleman. He is single and lives alone. First thing to note is that Alan does not have any roommates. So we only need to figure out his income for this particular credit. So first, what Alan needs to do is compile his federal 1040, so the federal tax return, so he knows his federal AGI, or his federal adjusted gross income. So once that's completed, he can now transfer that information over to the Montana Form 2. So Alan has some W-2 wages from a part-time gig over at a sporting goods store and some taxable and non-taxable income that's stemming from IRA distributions, pension, and Social Security benefits. We can see where the gross and taxable portions are separated out on page 1 of the Montana Form 2. On the left-hand side of the screen, you can see lines 2A through 6A, and this is where the gross and non-taxable portions are stemming from these various sources. So over on the right-hand side, located on lines 2B through 6B, this is where the federal taxable portions are added. And as we can see, these values don't necessarily match. So this is going to come into play shortly when we're actually figuring out the credit. So after adding in the taxable portions from lines 1 through 9, and then deducting any adjustments to income from the federal Schedule 1, and any of those adjustments, deductions would be appearing on line 10 if those were applicable. So then we would arrive to the federal adjusted gross income, so the federal AGI, and in this certain situation, this amount's going to equate to $20,000, and we are definitely going to need that number for the credit going forward. Okay, so jumping over to the actual 2EC schedule here, which again is located on page 10 of the return packet. We're going to be adding in some of the information found from page 1 of the return. Okay, so we'll kind of go through this line by line here. All right, so line 1, and this is going to be entering the federal AGI from page 1, line 11. So as we know from our previous slide, this amount was $20,000. So this is the total taxable income after adjustments, okay? So then line 2 is where you would enter any tax exempt interest from line 2A. And Alan did not have any tax exempt interest, so we're going to go ahead and just leave that line blank. All right, so line 3, we have enter any IRA distributions on line 4A not included on 4B. So what this is asking you is to include all the IRA distributions that were not taxable. So Alan had a total of $2,000 in IRA distributions, but only $1,000 of it was taxable. So he would include the difference between the two here. So, and in this case, it would be $1,000. So line 4, we're going to be doing kind of the same thing in the next couple lines. So enter any pensions or annuities reported on line 5 that is not included on line 5B. So similar to the previous, this is asking you to include the non-taxable income from the pensions and annuities. So Alan had the total of $5,000 in pension annuities, and $3,000 of it was taxable. So the difference of $2,000 would be placed here. Go into line 5. So subtract the Social Security benefits reported on line 6B from the line of 6A. Just as above, you're going to be taking the difference. So Alan had $5,000 in Social Security income, $1,000 of it was taxable. So we would be putting the difference between the two, which is $4,000. Okay, line 6, Social Security payments not reported except when paid directly to a nursing home. So there are some Social Security payments that are not reported on the 1040, and these payments would be included here. This doesn't apply to Alan in this situation, so we're going to leave that blank. Okay, so going down to line 7 is our refundable credits. So this is including the elderly homeowner renter credit received in 2022. And then any federal credits that you're receiving, like the earned income tax credit, federal child tax credit would also need to be included on that, any refundable credits. So in this example, Alan did receive a $200 2EC last year. So we're going to be putting that amount on this line because that was income that was received. And also keep in mind that the individuals filing for this claim, that if you receive the individual income tax rebate or the property tax rebate, both, you would enter the amount that was received on this line as well. Okay, so going on to line 8, so other income not included above, this would be the interest from municipal bonds, disability benefits, and any other household members' income. Our instructions also outline other types of income that we need to place on this line. In this case, this is going to be 0. Moving on to line 9, this is going to be for all losses in the federal AGI on line 11 of the 1040. So if you reduced your income by any losses, then those would need to be added back. So for example, if you were an owner of an LLC and used those losses to reduce your income, then those need to be added back here. Alan doesn't have any losses, so this line is 0, but if Alan had losses, this would be a positive number, even though they were losses taken as a negative on the 1040. Okay. So go into line 10 to get our adjusted or our gross household income. You're going to be adding lines 1 through 9 together and then putting the total here. In this case, the grand total is $27,200. Line 11 is our standard inclusion amount that's automatically added. And what that does is it deducts the $12,600 from the gross household income. And that's where we're going to be getting our figure on line 12 here. And then those are the values we're going to be using for the credit. So go into line 13 is the multiplier rate from the household income reduction table. So this table is located beneath the elderly homeowner renter credit worksheet. So you take the amount on line 12, which here is $14,600, and then based on the corresponding rate for the gross household income, it's going to be 5%. And it'll walk you through, depending on your the amount of income, it might vary. So you can go into line 14 is going to be our net household income. So that's where we are going to be multiplying line 12 by 13. So the 14,600 times 5%, and we're going to come up with 730. Go into that bottom section here for the credit computation. Line 15 is where you would add in any of the property taxes that you were billed for the Montana residents in 2023. Of course, this is a renting situation, so this would not apply to him, but if it did, that's where you put that information. So line 16, that's where we're going to be placing our rent. Alan's rent was $12,000 throughout the course of the year, or $1,000 a month. Well, to line 17, we're going to be multiplying line 16 by 15%. So 12,000 times 15% is 1,800. Line 18, we're adding lines 15 and 17. And since line 15 is 0, we would just be adding line 17 in, which again is the 1,800. All right, so line 19, we're going to be subtracting line 14 from 18, but it can't be less than 0. So line 14 is 730 and line 18 is 1,800. So if we subtract those two values, we will be getting the amount of $1,070. Okay. Line 20, we're going to be entering the lesser of line 19 or the 1150. And since line 19, is 1,070, which is lesser than, we'll be doing the 1,070 on this line. Okay, so then on line 21, we're going to be entering the percentage from the credit multiplier table that corresponds to your household income. Again, this is also located beneath the elderly homeowner renter credit table. So for a gross household income that is less than $35,000, it's 100%. So Alan has gross household income of the $27,200. So the multiplier is going to be 100% or 1. Okay, so then line 22 is where we get our final result, and that's where we're going to be multiplying line 20 by the percentage rate that we got from line 21. So the 1070 times 100% or 1 is 1070. So therefore, Alan ends up with the 1070 credit. Okay, I know there's a kind of a lot involved on this one. So going on to our next slide here. Here's what it looks like between page 1 and page 10, and kind of a solid visual on how we get those corresponding values and how they kind of flow over. Okay. All right, so now that we know the correct amount of credit, we can enter this total to our other payments and refundable credit schedule, line 7 here. Okay, so don't worry about that too much though here on page 11, because this value will automatically populate. Okay. Um, so just make sure you are adding the credit amount to the refund line of the return found on the refund schedule. And you'll see that on page 2. It's a little bit above where you would enter in your direct deposit information. Okay. And then once you complete that, enter in direct deposit information. If that's where you want it to go, make sure on the front of the return that your mailing address is correct. And then don't forget to sign and date the return before you send it in. So before we go on to the next example of kind of covering more of when a taxpayer doesn't have a filing requirement, does anyone have any questions?
Yes, we did have a question about, is the state looking at increasing the gross household income amount with the cost of living going up? Unfortunately, we don't have any power over that as the Department of Revenue, but the legislature does. So if they could introduce a bill next year during the next session, perhaps to do that if a legislator was interested, but the department doesn't have any authority on increasing the gross household income. That has to go through the legislature as it's set at $45,000. That's all we got so far.
Thanks, Rachel. Okay, so let's go ahead and move on forward here, and we're going to go through this one's going to go a lot faster here. So we're going to be going through a quick example on the 2EC on the Montana Form 2 without a filing requirement. So first thing first, we need to compile all of our income documentation. So that's going to be our 1099, so our 1099-Rs, our S, INT, NEC, the 1099 SSA for your Social Security income, award statements, and any other documentation you may have regarding the gross household income received for the credit year. So once this is compiled, we can start entering in the gross values to the respective places on the credit form. So we can tell here, if we look over at line 1, that line is now blank, and that is because there's no federal 1040 to copy from. So that information or no information other than who you are, your address, social security number isn't being pulled over to the front of the return. Okay, so in this example, Ellen received interest, IRA distributions, pensions, Social Security, and the full property tax rebate. So instead of having to subtract out the difference between the taxable and non-taxable portions for these lines, we can just go ahead and add in the full gross amounts. Okay, so once the additional calculation lines are completed, as we went through in the previous couple slides here, and we got the credit figured, we can now navigate back over to the main return page 1 and 2 and add in the personal information, the refund amount, and of course, don't forget to sign and date the return. Now, I will tell you guys the reason that I'm definitely putting an emphasis on making sure you add that value to the refund schedule is when we receive certain returns, if it's not showing that it is a refund and that credit is being claimed, there's a potentiality that it's going to be in a different workflow and we might not see it for a period of time compared to when the credit comes in with that refund on there. Hopefully that makes sense.
Hey Shay, we have one question hanging out there. If taxpayer receives property tax assistance, can they still take the credit?
They can, but you, at that point, when you have PTAP or any of the property tax assistance programs, it's going to reduce your bill depending on your situation. So whatever that reduced bill amount is the amount that you can claim.
All right, great. If you would, go ahead and continue for us.
Okay. All right, so now let's file a 2EC on our transaction portal or tab. So you're going to be seeing quite a few different options once you're here. And if you don't have a TAP, or if you do have a TAP account, you can go ahead and log in and then select file a return. But if you do not have a TAP account, you can select file a return under the quick link blocks. And then once this filing period is open for tax year 2023, this is going to be the first option. So before we get into that, let's discuss briefly a few changes for the non-logged in function on tap. As some of you may be aware, we did remove this function mid-year for the 2022 period, and that was due to attempted fraud schemes. And the department removed the functionality completely for the rest of the filing season. You were still able to file the 2EC on tap if you had a tap account set up with us. So it was just the non-logged in portion that got removed for the season. But going forward, we removed all direct deposit allocations to the non-logged in tap function. So all the claimants going this route will be receiving a paper check. Now, you will still be able to have a direct deposit allocation if you have a tap account set up with us. And of course, you can contact our call center if you are needing assistance setting up an account or needing to add third-party access to your existing tap account. So just something to be aware of. Okay, so once we get into on the return option screen here, under the individual returns block, you will have the option to select file an elderly homeowner renter credit. Again, this option won't be available until we go live with accepting filings of returns. So once that is available, this link will be there for you to use. All right, so it's first going to walk you through the credit qualifications and some general questions. If you or your spouse were 62 years of age or older as of December 31st, 2023, that you occupied a Montana resident as an owner renter for a total of 6 months or more during the year, that you resided in Montana for at least 9 months, the gross household income from all members of the household totals less than $45,000 during the year, if your Montana residence was subject to property tax in 2023. And we are going to go over how you can tell here shortly. And then, of course, if you have a Montana income tax filing requirement. Again, if you have an income tax filing requirement with the state of Montana, we highly suggest the route you go is actually filling out the Montana Form 2 tax form compared to going through TAP, because it is not a full return. Okay, so now it's going to prompt you to enter in some personal information, your first and last name, the filing status that you were choosing, social security number, your phone number, birth date, and it's going to be asking if the individual is blind or deceased. If you select the filing status of married filing jointly, you will then be asked to provide your spouse's information as well, just like you would on a normal tax return. And then lastly on the screen, you'll be asked if you have any dependents. If you do, select yes, and you can enter in the information there. If you do not, then go ahead and select no, and you will be moved to the next screen. And this is where you're going to be adding in your mailing address information. Keep in mind that this address will need to be verified. So select the red sign which states address needs to be verified after you enter in your information, and then your address will either automatically verified or a screen is going to appear showing the address you entered and then the verified address. You can see that on the bottom of the screen there. Okay. Then you're going to be asked if your mailing address is also your physical Montana residence. If it is, select yes. If it is not, select no and enter in the physical address information. So this is very important for the credit, and you will likely get a letter from the department asking for this information if it is not included with the claim. And this is also where you're going to be asked if you have any third-party designee. If you do, select yes and fill out any of those fields. And then if you do not, select no, and it will throw you over to the next screen here. All right, so while using the same principle as the Montana Form 2EC credit, we're going to be entering in our income, our property tax, or rent information, just like we did before. Nice part about this, though, is it's going to be auto-calculating everything for you. Okay, so we'll go ahead and enter all that information in, and you're going to be seeing a breakdown of any additional withholding that you had, and you'll see the amount of credit or refund you will be receiving based on the information provided while compiling the credit. And if you're using the non-logged in function in TAP, you'll receive a paper check after it is processed. And please make sure that your mailing address that you entered on here is complete and correct. And again, if you do have a TAP account and you're filing it that route, you will still be able to enter in your direct deposit information. Okay. So now once you determine that everything on there looks correct, everything's good to go, you can submit your credit. And just keep in mind that the system is going to be asking for an email address. This is the way you can check your status, make any changes, or delete your credit if you need to for whatever reason. Just keep note of your confirmation code and retrieval code. So before we go over and check to see if a residence is subject to property tax or not, let's go through how to check on your credit once it has been filed on TAP. So what you're going to be doing is going back to the main TAP screen, and under the quick links block, we're going to go ahead and select search for an existing submission. Okay, so this is where that email address and retrieval code is going to come in handy. You're going to enter in this information and select submit. And then you can see if your credit is pending, processing, or has been processed. You can still also edit your existing credit, delete the credit, and even print a copy of this credit for your records. So any questions on this segment before we continue on?
Yeah, we had 3 questions in the box right now. So is there an option to attach a statement in TAP?
There currently is not, but that is something that we are looking to implement for tax year 2024 when filing a claim on TAP.
Okay, and then we did have a question about, is there any way to find out what the amount of the rebates that the taxpayer received for next year? I believe we send 1099-Gs out on to folks that itemize federally, and I think we're going to send 1099-Gs out to everybody. However, I've got a question into one of our developers to make sure that I'm answering that correctly. So I will get back to you once I hear back from one of our developers. And then do you need an the prepares SSN if they have a PTIN?
And I want to say, I don't believe you do need their SSN if they have a PTIN, but I can go ahead and mess around with it and give you a concrete answer on that as well.
All right, that's what we got in the box. I'll follow up with that 1099-G question here in a moment.
Okay, sounds good. Thank you so much. Okay, so we'll go ahead and go into the next slide, and we're going to be looking into how to tell if a facility or resident is subject to property tax or not. So what we're going to do is navigate over to the Montana Cadastral website. Some of you became quite handy with this site after the property tax rebate period commenced. So what we're going to do is navigate over to the search located on the left-hand side of your screen. You can search information here a couple different ways. You can search by county and the name of the owner. You can search by street address located at the bottom of the screen to search a facility that way. You can use geocode. There's multiple different options depending on how you want to search it. So once you enter in that information and hit search, a map will appear showing corresponding pinpoints based on the information provided. So select the pinpoint and a property report card will appear, giving you some additional information here. So within this summary, you will notice a section that states general property information under property type. You can see if a facility is tax exempt here. So if a property is tax exempt, again, you can't use the rent paid towards this credit. So this is a really good tool for taxpayers in certain assisted living facilities, certain housing facilities, to be able to tell if you are able to use the rent. And please keep in mind, things can change year to year with some of these facilities. So on the top, there is a drop down, and I don't have a screenshot for it. There is a drop down where you can kind of filter by year. So if there is a change, just make sure you're using the most current year. Okay, So once you submit your completed credit, you maybe receive a letter asking for more information about your claim. So this letter may be requesting information regarding your rent, your rental agreement, your property tax bills, additional household income information, and clarifying questions the department may have. If a letter is received, you will need to respond before this credit can be issued. But we are here to answer any of your questions regarding these requests. So please don't hesitate to contact us if you have any questions on what we are asking for. An examiner's contact information is going to be provided at the bottom of the request letter. You can also call into our call center at 406-444-6900 or our taxpayer accounting line at 406-444-7712. And we'll be more than happy to help you out and kind of walk you through what we need or what is missing or any questions that you may have. Now, if you're a paper filer, you can include the copies of your documents within the return packet. So once we get that paper return and have it uploaded into the system, we'll be able to see that. Just keep in mind that paper returns do have a longer time frame of when you'll be seeing your credit compared to online. Okay. So I did also include the link address for our file transfer service, which is Okta. You can send the documentation here to be added to an account. Feel free to use my last name, Daigle, and these documents will be sent over to me and the team, and we'll have it attached to the account to kind of bypass any of those request letters being sent. And again, we are looking next year to add a functionality in TAP to where you can go ahead and upload those documents in real time and not have to worry about it. But all right, thank you guys for joining us today. That is the conclusion of my piece. So if you have any questions, please feel free to ask and we'll go from there.
Yeah, so I did confirm with our developer that we only send those we have the 1099-Gs for federal itemizers available out through our TAP website. So unfortunately, we will not be sending out any sort of documentation about the rebate amounts, which we have. However, you know, your taxpayers could probably verify using the check stub they received or bank account information on how much they received from the department. I can't remember what it's labeled as when it's coming in to direct deposit to your account, but you can definitely use those numbers if you're trying to figure out how much your client received. And then how do you calculate the amount of real estate tax if you have more than 1 acre on your property? I was trying to find we have a 1 acre land calculator available out on our website where you can type in the amount of acreage you have, how much your property tax bill was, and get the amount for the property tax amount associated with that 1 acre. And I'm trying to find the link to that, and I'll put that in the chat box here in a moment. That's all we have right now for questions. We've got 1 minute left if anyone else has any questions. All right, well, appreciate everybody's time today and joining us for this topic. And I hope you all have a great rest of your day and a great filing season to you preparers out there.
And just make sure you check our website because we do have more webinars coming up. So if you like this format and you want to learn more about our taxes, we do have some more coming up, as well as you can watch the ones that have already happened as well. That's where we're kind of putting them. And so you can always stay in touch that way. But I can release you for the afternoon and go out and have an awesome day and check back on our website often and get those questions to us. And you'll see that in our chat, Rachel just put the link for the land calculator. And hopefully this recording will be on our website within a day or so. It's a little bit of a process to get it from the Zoom client and get it put on our website, but hopefully by tomorrow we'll be up and running, and those people who have missed this presentation can watch it tomorrow. Other than that, Jay, Rachel, thank you so much.
Thank you.
Thank you.
All right, we'll see everybody later. Everybody have an awesome afternoon. And thank you so much for tuning in and spending your part of your morning with us. So hope to see you soon. Have an awesome day. Thanks all.